Also with us is David Herro, the Chief Investment Officer at Harris Associates. Morningstar, by the way, named him the International Stock Fund Manager of the Decade, and the $5.3 billion Oakmark International Fund that he manages is performing better than 96% of its peers this year. David, lots that Matt and I want to talk to you about, certainly on the international scene, but got to start with SAP, because you told us in the break that you guys own SAP, and the news that we're following right now is that SAP is said to be close to buying Sybase. If that deal goes through, is that a good one for SAP, if it goes through?
It all depends on the price, and the devil is always in the details with these acquisitions. This is a highly profitable company. They generate lots of cash. It's a great business. As a shareholder, I just hope they're carefully running the ruler, and that whatever they pay is economically viable and over the medium term.
They're saying $6 billion. That's the price. They're nearly $6 billion. That's the price that's being kicked around right now.
Yeah, what it really depends on is the multiples, the synergies, what they're able to extract, and not just fluff stuff, real synergies. What they're able to do with combining that business with theirs. Is it, 1 + 1 = 3? If that's the case, it's a good thing. If it's something that's going to be hard to integrate and at a huge multiple, then, that wouldn't look so good.
Still not exactly Oracle-sized acquisitions here. Let me ask you, David, about SAP. I mean, is it a play really on the global economic recovery? Because obviously they get most of their proceeds from the biggest companies in the world building up on their technology or adding to their technology.
In the short term, it might be, because companies have paused in the last 12 to 18 months because it's something you can really cut in a discretionary manner. But over the medium and long term, this is an industry that's really consolidated, and clearly, SAP has just been one of the big leaders. Whenever we interview management teams and speak with companies, and we talk about who they select and why, it is just amazing how many companies have switched to SAP. And when they do, the implementation is often difficult. Once it's up and running, it's all you hear are miracle stories on the type of visibility it gives them to their business and what a management aid running that type of software is. So over the medium and long term, what SAP is, it's a solution provider to businesses that really helps them earn more money over the long haul.
David, let me ask you, because it's something Matt and I pressed. We talked to Bill McDermott, the co-CEO of SAP, yesterday around this time, and we pressed him about the stock price, because it hasn't done much, in about 10 years?
Well, if you look back over 1998, it seems to have traded in a range since then. So if you got it on a dip, you're a happy guy. If you didn't, you haven't really seen much returns. So, I mean, David, why aren't we seeing more performance out of SAP's share price?
Well, to be honest, it is almost a reflection of the tech sector in general. Tech stocks still have not even come close to recover from those artificially high, unrealistic, and lofty levels of the late 90s. So it's almost as if the market is still digesting the overvaluation and all the hype that was in these things. I mean, at this price, we really like SAP. We certainly did not like it 3 years ago or 5 years ago or 10 years ago. But where it's selling at today, and this is consistent with, if you look at Intel and Microsoft, these are great businesses that are now value stocks. That certainly was not the case 5 or 10 years ago. They've been massively derated.
David, it's Julie here. So if it makes an acquisition like Sybase or another acquisition, and if, I know there's a lot of ifs, and if it's at the right price, does that make SAP more attractive to you, that it's growing through acquisitions?
If they acquire at the right price. If they are wise, they run their arithmetic correctly, and if they're able to get these things at the right price, it's good. To be honest, if they overpay, then it's not good. It's bad.
All right, so we will continue talking about and covering this SAP story throughout the show. We should get back with just about, what do we have, 5 minutes until the closing bell. Talk a little bit about the markets. We saw some gains today after, yesterday it looked like the optimism was faded. Let's go to Matt Shapiro right now of MWS down in Chicago and ask him, what do you think about, it looked like on Monday everyone was so happy about the game changer in Europe from the ECB on the Greece situation. Yesterday the optimism was faded, and today it's back. Has the verdict changed a little bit?
Well, it definitely has. I mean, look at the VIX. We've had some of the biggest moves ever in its history, and we're back down to 25, Matt, which I think is really kind of the level. But it is so sensitive to even the smallest move in the market. For instance, we're up about 15, 17 handles in the S&P 500. If we fade even 5 handles, the volatilities and the VIX comes way up really quickly. So there's a lot of nervousness still out there.
Matt, that's a great point. I mean, that even the tremendous moves that we are seeing in the VIX just point out to me that we're going to continue to see tremendous volatility in the overall markets here.
Yes, and the professional traders in the VIX are shifting their focus to the June option. So you would think that these options would kind of come down, but actually premiums are rising and risk is rising. They're just switching into the next month. So there's a lot of disquiet out there still, especially in the big upstairs trading firms.
Very much for that. I want to go back to David Herro, just about a minute to go in this market. And David, let me ask you about something that Jeremy Siegel told us earlier, saying that he's, I don't know, happy, but it's good that Europe happened the way it did last week and that we got the flash crash on Thursday. It sort of drove less serious players out of the market and also got us back down to levels where you wanted to see like a healthy correction. Do you agree?
Well, yes. I mean, the stocks have been strong since the March lows. But, more importantly, I think what this whole European problem provides policymakers with a wake-up call, if they so desire one. I mean, there's undoubtedly going to be a problem in our very own country and other European countries, and you could either deal with them or you cannot. I think the fact that the Europeans actually took this serious, that is the good news. And especially, you saw some measures out of Spain. They're actually cutting pay of government employees. The higher you are, the bigger your pay cut is. They're suspending pension payments, etc. This is the type of action we need.
Let's go back to our guest. We're talking with Matt Shapiro of MWS Capital out in Chicago, David Herro of Harris Associates. David, let me go back to, we've had so much news flow involving Greece, European debt package. We had some numbers about the U.S. deficit for April today. Let me ask you, I mean, do you feel like things are getting healthier internationally, or like a lot of our guests say, Nurul Rubini, I mean, there's a lot of worries around the world, and that's going to be a drag for some time?
It all depends on whether real concrete actions are taken to resolve the rapid increases in debt that we have seen in certain countries in the last 18 months. Those certain countries are the United Kingdom, Greece, the United States. These are places that have greatly increased, debt to GDP anywhere from 50 to 60% to projected to around 100%. If steps are taken to resolve this, I think the market has built in fears to some degree that some of these problems will not be resolved. So if they are resolved, we could breathe a little easier and go on to the next problem.
Let's get some reaction here from Matt Shapiro and David Herro. And David, let me ask you, I mean, I know SAP is one of your biggest holdings. What do you think about tech in general? It seems to be the darling of portfolio managers. It has really, in general, underperformed the benchmarks here, although Cisco hasn't done poorly.
Yeah, I mean, businesses are starting to spend again. Technological advances continue, and these stocks have been derated. And when you add those all together, I think the tech sector is a very attractive place to be, generally speaking. We have big positions in SAP, our domestic sides have big positions in Intel. These are great companies selling at very, very low prices.
What do you think, Matt? I mean, we didn't get enough to impress investors, but Cisco year-to-date is up about 12%. The S&P is up only about half that. Over the last 12 months, Cisco's up 42%, 43%. The S&P is only up about 30 and change. It has done better than the index.
Yeah, it has. It's one of my biggest holdings. If Cisco wanted to pay a dividend, it'd have a very high yield. But, I think the earnings were okay. They're not that blowout number, and we really expect just the best things from them. So just remember, you mentioned that technical level, 1170 in S&P 500, Matt. I really think the market is very unstable still with the VIX at 25. Remember, the VIX is not at 18 or so. It shows you that we could immediately evaporate these gains tomorrow morning. We could wake up, turn on Bloomberg, and the S&P 500 could easily be down 10 or 15 handles.
Are you set up for that, Matt?
I'm going to try to protect myself in case of that eventuality in the VIX.
Hey, David, 5 seconds left here. With all this market volatility, have you been aggressively buying on the lows? And you got to be very quick for me.
We've been carefully buying. Good companies that have gotten smashed on short-term news, we're buying holders, so we don't really care about the next day or week or month. we look at 3 to 5 years.
All right, we're going to have to get you back and get some names next time around. We appreciate our market guests here on Street Smart walking us through a bunch of earnings and a lot of other news.
there. David Herro, Matt Shapiro, thanks very much.